Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. All right, well, we've got a market going on here already. It looks like I'm a little bit late. Wait, where's Spotify? You're supposed to be pinned. Let's fix that. Good morning, Octavius, AO Ray, Robert, Uzi. Yeah, I think we got some interesting stuff going on today. So, let's come over to the charts here. Okay, we got rollovers for Bitcoin and gold. Man, my voice isn't very good today, is it? I think it's just allergies, though. I don't think I'm actually sick. Okay. ZN. So, yesterday, Federal Reserve meeting. Initially, the market interpreted the statement as hawkish, but then during the meeting, Jerome Powell downplayed the statement, saying it was not intended to be a hawkish thing, and saying some other things. I noted that the market kind of was moving up when they were talking about the low hiring rate. So we were up overnight, but now we are getting the numbers. Let's see here. We had U.S. initial jobless claims 207K versus the expected 225K. U.S. GDP quarter-over-quarter advanced 2.3 versus the expected 2.6, and U.S. price index 2.2 versus the expected 2.5. Core PCE prices advanced in line with expectations at 2.5, and U.S. continued jobless claims 1.858 million versus the expected 1.9015 million. So the only thing in those numbers that seems hawkish to me is the jobless claims. So are we moving down on jobless claims? That is very, very curious. But it is basically to the prices that we were at yesterday. So I don't know if it's really a big deal. S&P 500 trucking along. Well, they just kind of like didn't do anything after the Federal Reserve meeting, but they are a little bit higher this morning. Oil, man, I tell you what, if that is like the prettiest downtrend, I think. Let me do it with a real line, huh? That is like the clearest downtrend in a commodity like oil I think I have ever seen. That is just absolutely bonkers. All right, coming over to gold. Gold a little bit higher this morning. Ooh, actually, that's really nice. That's like right back up to all-time highs, isn't it? Oh, I really like it. Okay. Silver doing pretty good, but they're still a ways off from like the 33. Copper. Look at copper. Copper kind of in the same sort of a trough as oil, but it's a lot more volatile. Japanese yen. So we continue to see the Japanese yen sideways to slightly up, and the dollar, well, the dollar of the past day has really started to go sideways since the Federal Reserve meeting. Really was like the most uneventful Federal Reserve meeting in months. It was kind of nice, to be honest with you. And then Bitcoin up there, regaining. Well, I mean, there was a moment earlier this week that they were kind of testing that 100K price level again. They've come back up to the higher end of the range, but it still kind of seems to me that Bitcoin is struggling a little bit. Like they're just not getting that next push, and I think that Michael Saylor and friends would really like to have that next push, because that stock is still down big. Okay, so despite a little bit of a pullback to the rebalance, oh my gosh, I spent a bit of time yesterday trying to record a promotional video for the inventory cost basis. I wasn't very happy with my recording, so I think I'm gonna do it again. There was like too many pauses. It wasn't enthusiastic enough. I was like, no, nobody's gonna be like, oh, I want to get this. This guy knows what he's talking about. But look at that, man. They came right back to the cost basis. Crazy. And I've never seen it in like such a short time frame it work. So that's kind of crazy. But it really does seem to me that the market is reacting very strongly to this jobless claims data. Is 207 versus 225 that big of a deal? Well, I think that a decline of, what is that, 8 ticks? A decline of 8 ticks on a jobless claims beat, essentially. We would call it a beat. It's about normal. On the chart, it looks so big, though. On the chart, it looks so big. Man, so, oh, you know what? I want to do something over here, by the way. I got these labels on here. I just don't like the labels on the chart. Ninja Trader, you should change that. There's a couple of just teeny tiny little things that I'm really like, why doesn't Ninja Trader change those things? I just don't understand. Session highlights. Things where, like it putting the name. Why can't I just have a setting that says don't put that there? Because it's annoying, Yeah, there's something wrong with my tick replay data on this thing now. Come on. Hit and Miss Lab. That's a new name. Welcome to the stream. So, I don't know if this was there before, but on YouTube now, I've got this button that says goal. What does this do? Make super chat more fun with a goal. Set a goal to engage your audience in a new way. Once you reach your goal, celebrate with your community. Okay. We can set the goal to 1 super chat. Choose the super chat colors that count. All the colors. Set a timer. 3 hours. How will you celebrate? Wait. What will we do if we get... What do you have any idea? What would you like me to do if we reach our goal of 1 super chat? I can't even... You know what? You wouldn't even have to give me a super like to get me to trade price action. Like I want to trade price action to kind of like show people the problems with it and everything. But part of the problem that I run into with price action is I can come in and I can be like, okay, this is price action, and then everybody's gonna be like, that's not price action. You do this, and this, right? So like, it's not clearly defined enough for me to do that. You know what I mean? I was like, it's just moving around a little bit. Got it almost perfect. I posted 2 links yesterday and comment. Yeah, if you post a link in YouTube, they shadow delete them. So like it seems like it's posting, but it doesn't actually do it. Because if it's a link, that kind of makes me excited. That kind of sounds like a you know, a specific enough strategy that we would maybe be able to backtest it. Maybe. Price action see but you don't have post the link. Yeah. So if I just search for that, price action edge warehouse. And price action edge manual. Show results with warehouse. Raptor trading system. Hey, that's actually a Ninja Trader thing. I do kind of wonder, like, okay, if I just start buying advertisements under the term Ninja Trader, will that start bringing people? Because I really feel like that the indicators that I have is better than the other stuff that I've seen. But I'm not getting like, and I have a YouTube channel that's pretty successful, and none of these other guys have YouTube channels. So are they really just doing it all from like Google Ads? I wonder. So what you can try and do, hit and miss, is like replace the periods in the URL with spaces. And sometimes that will let it through. I'm just gonna put in the goal. Yay. Okay, there we go. Goal created. Seth just started a goal. See goal. 1 super chat. Yay. 0 of 1. Okay. You get 3 hours, guys. 3 hours to reach that goal. I guess it just makes the call to action simpler for the creator. It's probably just that like hardly anybody uses super chat on YouTube, whereas on Twitch, people, I don't know if it's still the same, but people used to use it incessantly on Twitch. Yeah, now you don't have to say it over and over again. But although Twitch had like bits, I really liked this thing that they had on Twitch where it's like, you get bits for a certain amount of time that you've watched the channel, and then you can spend the bits on a special type of chat, whether it's one that like just has highlights it differently or something like that. That was kind of nice. I'm still kind of surprised that YouTube hasn't added the same kind of community features to their chat that they have over at Twitch. I mean, it's been like 5 years now. Lots of volume at 07.5 now, I would say. But I am not... I kind of feel like that the only trade that would really make sense in this situation is to try and reverse that, but I don't see that one working. Does that mean that we're just going to kind of chill down here? I don't like it. Well, I keep my eyes open because, you know, this could be fertile time period for trades, so I don't want to, like, completely tune out. If we had enough people, it would be nice to try like a different. Although it just has like a goal of like a number of super chats. Really, it should be like raise a certain amount of money or something like that. Like if I could be like, okay, let's raise $700 every week. I'm watching that 08 half. They just traded 1,000 into it. Did I miss your famous opinion on current events? Oh, do you want me to talk about that plane crash? My goodness. Man. Brad, you shouldn't have said anything. I had forgotten all about it. Here's the thing. My wife's a flight attendant, right? She's flying all the time. The whole, like, you're just in an airplane, you're coming down for a landing, and out of nowhere a helicopter comes along and just flies into the side of you. Like, holy crap. It sounds like some people actually did survive, believe it or not. That is nuts. So nuts. Yeah, so you know, we were talking about it last night. Went to bed, kind of forgot about it. Hold open TikTok. And the first video I get on TikTok, old video actually, several years old, or several months old. So I don't know why TikTok decided to show this video to me, but it's like this, and it's a video I've seen on YouTube before, like back in October. I remember watching it in October, because my kids liked it, and that's how I kind of know the time frame and everything. So it showed it to me on TikTok, and it's this guy that he has like a synthesizer set up with a drum machine and a synth and everything, and he can sing, and then people in the crowd are like, you know, sing this song. So they want him to sing Blur too. You know what I'm talking about? I got my head checked by a jumbo jet. It wasn't easy, but nothing is. No, why are you showing this to me, TikTok? It's too soon. It's too soon. Why are you showing me that? You can't make jokes like that. Seriously. And you know the thing, Zero Hedge was saying 0 survivors. Okay, let me come back and look. Maybe I misread it. Like I honestly was kind of like avoiding saying anything. Okay, no survivor found after commercial jet carrying 66 collides. Maybe what I had seen was that they had recovered bodies, but not people alive. It really sounds like that the pilot of the helicopter made just a really big boo-boo. Like, you know, because that was the first thing that I said. It's like, how does air traffic control let that happen? Okay, well, they said, you're on a course with an airplane. You need to make sure that you go behind the plane. And then he just flew right into the side of it. What? How? Wait, like, oh man, actually, now that I'm thinking about it, is there a really high probability that this is a terrorist attack? Because wouldn't it be kind of difficult to hit a moving airplane like that? Wouldn't, like, I think that if I wouldn't be able to hit a jumbo jet if I tried. No doubt the aviation, well, yeah, I need to see if John Hollings said anything. Good morning, Johnny. Hit and miss. I'm still. I didn't see any more comments from you. I still want to see the price action strategy that we can trade. Is it John Hollings? What is his last name? The guy on TikTok. Alex Hollings. Check the I don't see a URL. Give me the name of the domain. Don't put like a .com or any, no periods in it. Just the name of the domain. Okay, Alex has not posted anything about it yet. I feel like I'm kind of jumping the gun here by saying this, but it seems to me that I wouldn't be able to hit an airplane if I was trying. So I'm a little concerned. Officials at the press conference have confirmed that there are no survivors that occurred in the mid-air collision between a U.S. military helicopter and an American Airlines flight that happened in Washington, D.C. See, if it was like a civilian helicopter or something, then we would definitely be saying, oh, that's got to be a terrorist attack or something. There were numerous elite junior U.S. figure skaters on the plane, as well as the 1994 world champion pairs figure skaters from Russia who were coaching the future of U.S. figure skating. Oh, no. This only surprising thing is it took this long with the near daily near-miss reports we were having for a while. Air traffic controllers have been taken over by DEA's slapnish. Okay, if you say so, but man. Either way, super, super big mistake on somebody's part, right? The dollar is really dropping here. So that seems to be the recovery. Maybe I was right the first time. Maybe the play was it's gonna reverse. I tell you what, gold is on a tear, man. That's the trade. Gold is just going and going and going. I still don't see another comment from Hit and Miss. So you must... Okay, so try this, Hit and Miss. Do you have Discord? Because if you message me on Discord, then that would probably work. Edgeful. Oh. I'm familiar with that website. Do they like have a blog or something? I've actually spoken with the owner of this. I thought it was really, really cool. I wasn't like, I don't know if, you know, they have affiliate stuff now too. That's cool. I don't know if it was really some, you know, like the issue is statistics like this can be a little bit deceptive. So at the time that I looked at it, I was like, I don't know if that I can actually, there's anything in here to help us. But, you know, they're constantly adding stuff, so it's maybe gotten there. And I'm just kind of grateful that I got to see it in its earliest stages that they thought of me. That was super cool. Newsletter? Okay, what if I do this? What if I search edge full price action? If you can come up with a set of words to type into Google that would pull the article up, that would probably be a way for us to find the article that you're trying to tell us. Price action secrets no one's telling you. Oh, they have a YouTube channel now? That's not very many subscribers. What's with that? All right, you won't be able to hear it, but I'm gonna watch this real quick. See what he says here. Previous days, he's just talking about the previous day's range. Oh, they have trading view indicators now. That's interesting. Man. The statistic that they're telling me about right now, I'm already like, yeah, you only over the past year, and there's no risk reward involved in it. Yeah. Like really what I'm interested in is not necessarily a price action strategy. It just seems that to me that the people that are sharing performance that kind of seems to be in line with this kind of performance seem to always be claiming price action. But I want a risk premia strategy. I want a strategy that works out most of the time. Not necessarily because there's an edge in like knowing what's going to happen or anything like that, but because it's taking on risk and you're getting paid for taking risk. You should be able to get paid for just taking risks that other people don't want to take. So selling options, that's a pretty clear risk premium strategy, right? Well, I don't think I have enough money to just sell options. So I would really love some way that you could do a risk premium strategy with outright positions in futures. But I haven't really found anything that really seems solid. Maybe like mean reversion in spreads might be it. Still haven't tested that. That's another one that I need to add. I actually did a lot yesterday. So one of the things I did, you want to show, and let me show you something that I made yesterday. Because I was just thinking about it. I was like, oh, well, why don't I have this? Okay, so I take a 5-minute chart here. Or actually, let's do it like 30 minutes. Let's do like 30 minutes. So one of the first things is that I kind of have a hard time telling like when was the most active times of the market. So I made a new indicator here called the session highlight. So basically the period I can define here when it starts. So I'm gonna have it be to my trading hours. Actually, in this case, let's do it to the end of the S&P 500. End minute ends at the top of the hour. So from when the treasury market opens to when the stock market closes. Add that on there. Okay. So what it does is it kind of darkens everything else. You can see there. Okay. So that's the first one they added. And I added that one so that, you know, when I was showing you the, hey, here's our indicator, I could focus people's attention only on the most active market hours, right? And then the other one that I added was we have a volatility projected range, but, you know, the problem with that one is you have to have the VIX, and most people trading futures, they don't have the VIX. So I made another one that's just called projected range. Where did it go? There it is, projected range. So I haven't fixed all of the settings yet and everything, but you just add it there and then it. So it is doing projected range based on its standard deviation. Or I kind of have both of them on there, and I want to make it so that you can switch between them. But as I was like going through on these, really is just not as good as the VIX. That's really just not as good as the VIX. But it kind of got me thinking, like, I wonder if I can use some of these models that I've seen, like Garch and stuff like that, to predict what the volatility is going to be instead, if that's better than the pricing that the VIX gives. Because I seem to recall reading studies where they were able to predict volatility better than the VIX did. I don't know. So I added that. It's kind of fun. And then I recorded a video and edited it about the inventory cost basis. But I really didn't like it. I just really didn't like it. Maybe I could go with it anyways, because I don't know if I'm really going to get a chance to re-record it. We could record it right now. We could try recording it right now. I don't know. It's kind of crazy to me that it's Thursday, that it's like another week already gone. On one hand, I'm doing a lot. I'm staying busy. I'm getting things done. But on the other hand, it's just like not nearly as fast as I would like it to be. I think I want to change my script up is probably what I should do. From what I'm seeing, the BH chopper wasn't broadcasting its GPS signal at the time of the crash. Is that suspicious? Oh, Hit and Miss Lab says pair trading in futures. That doesn't seem to be pulling up anything. That just sounds like an arbitrage trade. Okay, well, we're going to do some backtesting on that at some point. I mean, when the ANG flies their Black Hawks over my area, they show up on flight trackers. So at the very least, unless it's mission tentative, I think broadcasting would be normal. Yeah. Maybe you can even pair trade them from the DOM tape. I mean, when there is upward DOM pressure on bond and downward pressure on, say, the bill, that idea. Yeah, it's a good idea. I don't really think it's price action, though. Like, the way that I would do it is, like, you know, generate a bunch of statistics about the relationships between the two of them and try and take a trade when the current, you know, current measurements are outside the range of normal, you know? On Elite Trader Forum, there is a guy who trades only pairs. I don't know how much he makes, but he pays his programmers full professional fee, not like Fiverr. Yeah. Mm-hmm. Like, especially if you're fast, that can definitely be a profitable strategy. The amount, so it's really kind of an arbitrage strategy, right? So the amount that you're going to make is going to be more in line with like, kind of more of a risk-free rate of return. Probably a bit more than the risk-free rate of return, but like you're not going to beat the index doing that, but it's totally in line with the sort of thing that we're looking for. Yeah. I really do kind of wonder if I'm just sleeping on the pairs trading, that like I should be trying to pairs trade the micros and maybe not necessarily day trade them, but just taking swing trades. Yeah, co-located servers are not that expensive. That's true. Speedy servers, I think we can get it for a few $100s a month. Probably not something that I would do right now, but something that's definitely in the cards for us in the future. I would really like, man, if I could just get another day job. I came across 2 jobs yesterday that I was really like, oh, that is just perfect. There was one that they were in the healthcare industry and they were looking for an SRE, but they were calling it like site reliability engineering -QA. And I'm like, how many people are there going to be out there that they've done both QA engineering and site reliability engineering? Like there's like, they couldn't have made a better posting for me. So I submitted for that one. I really, they'll probably come back to me and oh, we've looked at it and we're not going with you at this time. I'll probably get the auto rejection today, but I'm really hopeful about that particular one. When we get back to that point, kind of got like 2 things going on. Is one is that we're doing the video editing, and 2 is that we're trying to promote the indicators. So I think we'll probably spend more time on that. Once I'm through with those things, though, then I do think that we can go to a couple of different projects. And one project could be doing pairs trading. I think that that's a really good one. But I also think that one project could be, well, and one could be like doing stuff with LLMs. And then another one that I want to do is watching stocks more. So like getting the DX feed and watching the order flow on stocks. It's something that I want to do. Shall we start with NVIDIA? Yeah, I think that I would be putting up just the most popular stocks that day. So right now, we would absolutely be watching NVIDIA, and we would be like calling out the ones that we're watching that day in the stream title to try and grow the stream. Yeah. Because one of the things that I see, that I'm actually when it comes to the growth of the channel, here's the thing that bothers me the most right now. We have done a really, really good job positioning ourselves for certain keywords. So if you're learning order flow, if you're learning about treasuries, and if you're doing futures, then our channel is going to come up. And the issue is that the group of people that watch content about futures is completely different from the group of people that are watching like day trading content in general. So the stock traders outnumber us by like orders of magnitude. And so what I'm starting to see is I'm starting to see people kind of come into our lane. And because we're not doing the stocks, they're maybe starting to get a finger hold on it. I'm not seeing like they're beating us out or anything, but like I am starting to see people get in there and everything. So I'm kind of like, oh, we need to generalize a bit now to stay competitive. And on top of that, I've seen a substantial evidence to suggest that there's a really strong edge doing this in stocks compared to like treasury futures. Because like pretty much everybody that trades treasury futures is watching this stuff, but hardly anybody is watching this stuff in stocks. What time is it in Chicago? It is 8:20. I watch you because you use NinjaTrader? Oh, okay. Oh, that's interesting. Should use my indicators. You have my free indicator package? That's another one is that there's some really cool stuff in my free indicator package that like I really feel like everybody should have. Like the intention there is that everybody that uses NinjaTrader uses the free indicator package. I don't use them. Okay, let's go into what's in the free indicator package. And then I'll show you the cost basis really quick. Let's just make like a new chart. Chicago is 1 hour behind New York. That is correct. Okay, so after installing the indicator package, you should get a folder up here at the top that says Speculator Seth Free. And you open that up there. Okay, so bid-ask spread. This one is interesting. I haven't messed with this one in a while. Okay, so what this does essentially is it's looking at the best bid and best offer and what the spread is between them. So it doesn't work historically, but you put them on there. If you're trading a really thin instrument, this can be super, super interesting. But I don't know if that one's going to do anything for us on ES. I think we'd have to wait a little bit too long for you to see what that one really does. Okay, line at time. That one will just draw a line on your chart at a certain time every day and then make a sound when we reach that time to alert you of like it's time to stop trading or, you know, something's going to happen here soon. Label remover. Okay, so you know how like if I add an indicator to a chart, oh, I have a developing point of control is in the free one. That's interesting. Well, okay, anyways, if I just click OK. So you get this bid-ask spread bit right here. I hate that. Don't you just hate that? Especially if you come into an indicator and like, let's add like a bunch of SMAs. Okay, so now we've got a bunch of SMAs on the chart, and I got all of this text on my chart that I absolutely despise. And how do you get rid of that? You have to go into every indicator. If I go into this indicators right here, like there's the bid-ask spread there, I can come into the label and set the label to nothing, and then it goes away. But I still have 3 other indicators that have it on there. So I have to go into every single stupid indicator that I've added on the chart and remove the label for them. But if you have the Speculator Seth free indicator package, that is a package you download, install it for free. It is free forever. You can even go and look at the code if you want. I can do label remover. and click OK. And what this will do is it will go into all of these indicators and remove their labels for you. Ta-da! Now it's gone. How cool is that? Let's see here. I discovered a great OnlyFans indicator called Footprint IQ by YouTuber Trading IQ. I think I maybe have heard about that. There was another thing is I saw somebody. Okay, so there was a thread, and they were like, who's a profitable trader? And there was this guy that's like, oh, I've been profitable. I've been profitable for 5 years, and I'm like, bullshit. So I just like start going back through his profile, and it was kind of hard to figure out, but I think I found his YouTube channel, and he was talking about footprint charts. So I'm immediately like, because most of the things that people try and teach you on footprint charts are nonsense. But, maybe he's different. I didn't have time to really dig into it. Another thing that's in the free indicator suite is the watermark. So now you can have ES written on there. And this uses like DX drawing code, so it's hyper efficient. There's like some other watermarks out there, but they don't really do it correctly, and they would like always draw in front of the bars and things. So I've fixed that. This one's perfect. I also have some of these ones like the spread. I have a more advanced spread in the paid suite, but there's a free one. There's a free version of the yield curve. There's also some that I'm kind of like, why doesn't NinjaTrader include this? Like inverse. So I use this one. I can't trade without this one. You come over here, the Japanese yen. Okay, when we're doing it on the FX futures, it's priced basically in yen. So you can see it's like 0.0065, but everybody trades it the other way. Everybody else trades it yen USD or whatever it is, right? Which is more like 153. So how do you get 153? Well, you take 1 and you divide it by this, and then you get 153. So it's just the inverse. So that's this down here, inverse. Now I can see the price that people are using in the Forex market. Why isn't that just included in NinjaTrader? It's like a one-line code thing. Kind of weird, but like, yeah. Okay, I'll look that up. Where's my to-do list? Most powerful footprint indicator on TradingView. I've had some issues doing order flow type stuff on TradingView. Part of it is that to do anything like footprint, you have to be paid. You have to be using the paid version of TradingView, right? And I'm really not interested in paying for TradingView right now. He says, yes, it's free. It can't be free. Oh, I know. I bet I know what he's doing. He's full of shit. Okay, let's see how he's doing. Let's see how he's doing it. Okay, here we go. I think this guy is full of shit. Oh, you have to unlock access to it, huh? Access now for free. Gosh. Is he gonna let me see the code? Protected script. Yeah, he's full of shit. So let me explain what's going on here. So, man, I don't really have a very good footprint chart. Up. Let's make one over here. Okay, so here you got ye old footprint charts. Okay. So first, let's just review for anybody that's not familiar with what a footprint chart is, what we are looking at. So these numbers on the left are basically how many orders traded against the bid versus how many orders traded against the ask. So these are basically market buy orders and the amount of market buy orders that traded at that price during that 30-minute period. And this is basically the number of market sell orders that traded at that price during that time period. Okay. And generally what they tend to do is they say, okay, like if there's some sort of strange imbalance, like you see here, it's saying there was more than double the amount of buys here than the amount of sells, and so it highlights it for you. And that people will create all these setups that are like, that means that we're going to go higher, and you could have bought it, right? Etc. Etc. Okay, this is how footprints trade. So how do we sort out what was a buy and a sell? There is something. If you want to go and you want to read the literature about this, there is something called Lee Ready. Lee Ready essentially does this. It says, what is the current best bid? And what is the current best ask? Okay. If an order comes in at or above that ask, then we know that that is a market buy. If an order comes in at or below that bid, then we know that it is a market sell. For futures, this is good enough because the difference between the bid and the ask is almost always one tick. But on stocks, this is often like 10 cents or more. So what if there's an order comes through in between them? Then what we do is we say, what is the midpoint between the bid and ask? And if it is below that midpoint, then it is a market sell. And if it is above that midpoint, it is a market buy. Okay. Now, you can get more complex with it. You can actually say, when we see an order in here, go and look for, in the level 2 changes for a market depth change that corresponds to that, and that will tell us whether it was a buy or a sell. Things like that to really make it super accurate. Okay, but generally speaking, Lee Ready is something like 90% effective, or they have like numbers on this and things like that. Okay, but the key thing to pick up in all of this, aside from you understanding what Lee Ready is, because that really helps you understand the market, is that you have to have historical bid-ask data. In order to do this. Okay? You have to have historical bid-ask data in order to make a footprint chart. In order to sign, the Lee Ready is basically a method for signing the order flow. What we mean by that is looking at every order and saying whether that market order was a market buy or a market sell. That's signing the order flow, okay? You have to sign the order flow. Trading view, the default trading view that you can get for free does not have market depth. That's expensive data. You have to pay like, a data fee every month. I believe that there are ways that you have to pay for the paid version of TradingView, and you have to pay for like market data from CQG, and then you can get market depth. And then I think that they have some indicators that do it. And like there is not anything in their public API that lets you look at market depth. Okay, so you can't make these things in TradingView. So what is he doing? How is he doing it and making it accurate? How is he doing it and he's making it accurate? So what you do is you say, here's a bar, and this, let's say that this is a 30-minute bar, right? Well, we could look at it and say maybe there's like 1,000 in volume that traded in this bar. And since it was a down bar, that means that the majority of this was sell. And like based on how much of it was down and everything, we can say this is how much of it was buy or sell, right? So I split it into a bunch of little bars. I get a 1 minute data series underneath, and then for each bar I kind of say, okay, this is X% buy and X% sell, and what the percentage of each one of them are, and then I kind of reconstruct a footprint chart that way. Okay, so you're basically using whether the bar went up or down to determine the volume in that manner. And all he's saying is there were some people that had an indicator that did this, but it was like doing it on a 1 minute period, and I made one that did it on 1 tick. That's all he did. So it is not perfectly accurate. He does not know anything about market depth. That's why he's saying that. So he's full of shit. But it's not that he's full of shit like he's trying to pull a fast one on you. He just probably doesn't know any better. Sorry. So if you're watching this, Mr. Trading IQ, it's cool that you wrote that, but you need to go and learn about market depth. Similar output. I would say that if he's doing it with the tick level data, that it's probably going to be like maybe 80%. So like, here's the thing, especially when you're doing stuff where you're like, okay, there was 128 that traded here, and there was 200 there, and there was 300 that traded here. That's like a really huge imbalance, so I want to buy it here. Okay. Well, if instead it's 250 versus 290, okay, now it doesn't meet my qualifications, so I don't take a trade. But the difference in here is not necessarily that huge. So I'm I'm really doing an extreme example, but like a 10% difference in the accuracy of signing the order flow can, if when you're using an algorithm, when you're using a robot, will result in radically different trades. It's like maybe you get into the same trade, but you get into it a bar earlier or a bar later, and that completely changes everything. So if you're really doing quantitative work, you need them to be accurate. If you're just trading it off of the chart, it's probably okay. But then that's where it kind of comes into, I really am not sure that there is any value in the footprint chart. Like, it's an interesting way of organizing the data and everything, but all of the so-called aberrations that people look for in the footprint charts that I've seen, there's no reason to suggest that those would actually work. And I did backtest one or two of them, and they were nonsense. So, you know, now for something like cumulative delta is something that we know that there's a strong autocorrelation in the sign of orders over long periods. So cumulative delta does hold some degree of edge to it. Probably one of the like, in terms of like technical edge, probably one of the strongest technical edges that you can find in markets today. So having cumulative delta up there is definitely interesting, or definitely useful. And if you have, you know, the cumulative delta is off by 10 to 20%, is that going to change what you do? Probably not. Not what you as a human would do, at least. So yeah. But he is kind of giving people impressions about things that aren't accurate. There's a bunch of retail traders, they're not going to know any better, but those of us in futures that are working with market depth data every day, it's, no, that's not what, that's a big red flag. That's how I would put it. He's not a huge channel, only 9,000 subscribers. That's not bad. But okay. Oh yeah, I was over here on this. Can you show your cumulative delta indicator? Well, so I have a couple actually. So, there's not really much of a point in me putting it up on a chart. Well, I have this one, right? So, how is my cumulative delta indicator different? Well, one, I am able to draw bars, so you get, the open, high, low, close of the cumulative delta during the time period. That's a little useful. But the main thing that my cumulative delta indicator does is it caches the data. So these issues with, hey, if it's even like 5% different, that can affect the way that your algorithm works. Well, if you are using historical bid-ask data versus the live bid-ask data that you get, there can be differences. So what we do instead is just when we're live, we record it. And then it pulls it up, and so that way we know that the values that you're using in your backtest are exactly the ones that you saw when you were live. I also have one that I call advanced cumulative delta, and that one is meant for stocks. So I don't have the stock data right now, so I can't really show you, but this uses a more advanced algorithm that is more accurate at signing the order flow in situations where the market is moving very, very quickly and there's a large spread, like there is in stocks. So that's because when you get over to stocks, the problems with lead ready are large enough that it can cause you problems. So if you want to do cumulative delta on stocks, then I would highly recommend you buy my indicator suite and use my version of advanced cumulative delta. Okay. Is there a way to save NinjaTrader 8's real-time data without losing? Yeah, that's exactly what my entire indicator suite is about. So all this stuff that you see in this chart in the upper left-hand corner, that's basically us recording data so that at the end of this expiration, we can go back and do a bunch of back tests and see if there's any interesting behaviors that we can detect from them. And possibly pass all of those data series into like machine learning. I also have something on this chart. You can see I didn't get rid of the labels, called data pipe. And what data pipe does is it saves literally every message that is sent. And then like at the end of the bar, it writes all of those messages out into a file. So you could then take that data, you could like parse it back out you could load it back up and parse it back out in NinjaTrader, or you could start parsing it in a different language like Python. Now, at least all of the data that you've ever received, you can save. And then you can backtest on it. And that's the whole thing, because NinjaTrader has really good backtesting and everything, so that if you want to test how price reacts to a simple moving average, etc., it's really good at that. But the problem with that is that once you start going into all of those, you find out that the market is very statistically efficient and that there's not really a lot of edge to be had from doing that. So then you want to go into perhaps more fertile ground, somewhere where there's not as many people looking, and somewhere where, frankly, there's more statistical aberrations to find, because there really is more statistical oddities in the order flow than there is in price, because the price is just too random. But then you can't do it in NinjaTrader because you can use tick replay, and that takes forever, and you only get like a year's worth of data. So what are you left with? Save it yourself. And so I've made tools that let you save it yourself. And that's basically what the indicator suite is all about. That, and there are a couple of tools that I really think should be included with the platform that aren't, and are essential tools like the spread. I have an advanced spread indicator that does things like rolls. It changes with the roll for you and things like that. I don't get why NinjaTrader doesn't have that built in. Synthetic dollar index, we're just using the FX futures to calculate what the dollar should be based on the FX futures. some compound instrument sort of a thing, you could create a way in NinjaTrader to create like a synthetic instrument, but they don't have that. So we have this indicator. And there's actually a lot of this one, the synthetic dollar index in particular, is one that would be really good for NinjaTrader to be doing themselves, because there is a lot of complexity involved in managing like 6 different data series and problems that come about with managing 6 different data series. But that's okay, because my indicator suite is only $200 right now. So while we're at it, I'm just going to come over here and I'm going to like change things so that you not necessarily, you can just see like the whole chart. And let's talk about the cost basis. Let's go to a different day. So, I really like to start with, not that one, although that one's super, super interesting too. This one. This one is my favorite. Okay. So, oh, wait. I just screwed up something, but that's okay. All right. So, can you track market maker positions? Well, it turns out maybe you can, and that's what the inventory cost basis is all about. So I will explain to you how we estimate market maker positioning in a moment, but first, I just want to show it to you because what you see is just super, super impressive. I myself was very skeptical of this idea when I first found it, and I'm still doing empirical research on it with some pretty impressive first results. But just understand, this is really cutting edge stuff that we don't fully understand yet. Still, it is just uncanny how accurate this thing seems to be. Nothing else I've seen comes even close. Like, it's easy to fall into confirmation bias with this sort of a thing. It seems like it's reacting to this price, but like, is it really actually doing it? But with this indicator, you will see hard bounces to the tick off of these lines during the most active hours of the market almost every day, especially in very thick instruments like the 10-year treasuries. So, what is this thing doing? Well, just think about how things work for a large market maker providing the majority of the liquidity to the markets. So the market maker will place limit orders, and when those orders are filled, the market maker is taking on inventory. Now, along the way, they're going to pick up that inventory at multiple different places, and they're also going to take profits at different places. So based on where they were filled, we can determine what the average price, aka the cost basis, that the market maker paid for their current inventory. So that's what these lines on the chart are, this orange line and this solid blue line. The way that it calculates these is by modeling best and worst case scenarios based on the volume seen in the market. So it will go through one scenario where there's a market maker that is taking on all of the long inventory, and another scenario where they're only adding short inventory. And so that's what these lines are. The solid blue line is the cost basis for a long only market maker, and the orange line is the cost basis for a short only market maker. Water break. Now, the model also attempts to model profit-taking scenarios. So it assumes that the market maker will always take the chance to close out inventory at a profit,
Block
even
buy.
So it assumes that the market maker will always take the chance to close out inventory at a profit, even if it's just one tick. We then get the theoretical break-even points where the market maker is losing money, and that is the dotted blue line down at the bottom that you see here, and the dotted orange line is a little bit too far away for us to see at the moment on this particular chart. Okay. Now, of course, the market is a lot more complicated than these simple, naive rules. There's not one market maker responsible for all of the fills in the market. They don't always take profits in that manner. This model is just mapping out like a best and worst case scenario. The truth is somewhere in between, but it turns out that these extreme scenarios can be incredibly useful. So how do we trade with it? Well, first of all, I need to warn you that the indicator is going to behave differently depending on the type of market that it is. It's going to be the most useful in scenarios where the market maker is really in control of the market. So there's not a strong trend that day, or there was a trend, but that trend is already over. In those scenarios, the market seems to have a strong tendency to come back towards the cost basis lines in the middle and then hard bounce. For instance, like what you see right here. Actually, let me do that again. In these scenarios, the market seems to have a strong tendency to come back towards the cost basis lines in the middle and then hard bounce. This is also what tends to happen when you've had a trend, but the trend is over and we are now mean reverting. And that's what you can see on this chart right here. We had a strong trend. We are moving back up. What happens? We immediately come back to the cost basis and hard bounce off of it. And it then does it multiple times after that. You will also find that it is very difficult for price to stay above or below the dotted lines like we see right here. But you've got to be careful with that, because if we do have large players in the market or there's a trend, then the market seems to just ram past those dotted lines over and over again. Let's find that one. Hold on. Why is the circles that I'm drawing so big? So if we go back 2 days before this, then we get an example of or actually 3 days before this, of a really strong trending market. There we go. Okay, so what was I saying? You've got to be careful with the break-even lines, though, because if we do have large players in the market or it's a trend day, then the market will just ram past those dotted lines over and over again, as though they are constantly stopping everyone out as the market continues to push. This means it's very important to know what type of market you're in first. This model is good at helping to explain endogenous moves caused by people's existing positions. It's a completely different situation when new money is coming into the market. And to determine what mode we're in, you will have to know about what's going in. And to determine what mode we're in, you're going to have to know what's going on in the market with news and so forth. So for instance, on this chart, there's a Federal Reserve meeting the next day. So nobody is really looking to make moves in the treasuries. And you can see that they just kind of hug the cost basis lines and move back and forth between them for the most part. Versus on a day where we're having a really big move. Well, you know, I don't even need to go into that because I already showed you a trend, right? Okay. Now let's go back to yesterday. It'll roll. Actually, no, let's not do yesterday. Let's do this one. Maybe that one, or maybe where was the one where we really come back up to it? It's kind of funny. That one is so good. Man, it just does it. It's every day you will find it. So it's so hard for me to pick which ones to show, but I suppose I should show you. Okay. Here's another example of when it's a tight range bound day. They like to just kind of hug those cost bases and trade back and forth between them. Although we did get an attempt for the buyers to try and get above that and get a hard rejection over here. Right? That was the trend day one. There's a one beyond that. Okay, here we go. Here's an interesting bounce. Fine. I also want to warn you if you have any ideas about how this market makes blah, 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 blah. I also want to warn you if you have any ideas about how this works based on those price action traders out there that claim to know the algorithm that controls the markets or any of that, okay? Those ideas are nonsense. I hope you can already see how this is different. We have to look at the volume and figure out whether the market orders are buy or sell in order to figure all of this stuff out. So you have to have market depth data in order to do this analysis. You can't get to the same place with just price patterns. And overall, I just don't find that the behavior of what I see here on the chart with these models really matches the theories of price action traders at all. In general, the market maker is really just trying to make money from the spread based on current conditions. They're not specifically targeting retail or anything like that, even if these dynamics can result in endogenous moves. And this is a good example of one where I think a lot of the price action traders would be looking for a reversal here, and it hard bounces off of the lines and goes lower. Now let's skip to today. Now, I also want to talk really briefly about the properties of the indicator. Blah. Where am I? So let's just talk really briefly about some of the indicator's properties and the companion indicator. So in most cases, so there's really only two major settings. There's cumulative and reset on session. And in most cases, you're going to want both of these checked. So what cumulative does is it just makes sure that inventory is carried over between bars. So if you have like a higher time frame bar, like a 30-minute bar, and you just want to see what was going on inside of that one bar, then maybe you would turn cumulative off. Also, reset on session. If you want to see inventory carry over between sessions, then you would turn this off. But in general, I would recommend keeping reset on session on, because as the session goes on, there's going to be more noise, more things going on in the market. The indicator starts to become less effective as this session wears on. So you really do want to reset it at the start of the session. There are also some settings for the caching. So the main purpose of most of my indicators is to save this data so that you can do accurate back tests later, because if it's dealing with level 2 data, NinjaTrader for the most part just discards it. So if you want to do back tests on this stuff, I would recommend having the load cache data and save cache data settings checked. That does use disk space though. So if you're not going to use that stuff, I would just leave these unchecked. You might also notice that there is a ton of empty data. I shouldn't say it like that. You might also notice that there is a bunch of transparent data series. So these are all so in order to calculate the main values for the indicator, we have to calculate things like how much inventory do we hold first. And so these values can be really, really useful, but you don't want to graph them on your price chart because these are values like, 100,000. That's going to completely mess up the scale on your chart. And there's a problem with NinjaTrader. It doesn't let you have something that both draws on the price chart and has its own data series underneath. You could add the indicator twice and change which data series are transparent and which ones aren't. But then you have 2 copies of the indicator running. It's a relatively involved calculation, so that is not ideal. So instead, what I did is I created a nifty little hack, and that is the companion indicator. So what the companion indicator does is it finds the cost basis that you've already added onto the chart, and then it just steals the values from that and creates a data series underneath. And some of these can be really, really useful. So for instance, I have the inventory long and inventory short being graphed down here. And so this is going to alert you to situations when maybe the market maker is picking up more inventory than usual, or they're getting rid of more inventory than usual. And this can alert you to situations where, maybe the market maker will start pulling their offers to try and rebalance, things like that. It can be really useful. Okay, so if you want to try this indicator out, you can download it from speculatorseth.com. Just download the Elite Indicator package. That package comes with a free 2-week trial. So I want you to be able to put it on your chart, watch it for 2 weeks, see that it's valuable to you before you buy it. You get a free 2-week trial. And then after that, it's only a one-time fee for the lifetime license. And of course, one of the big advantages that you get with the indicators is that you can come and talk to me at any time. I have a stream every day. I'm very available on Discord. I can answer any questions you have about what the indicator is doing or how it might apply to that particular situation. And we can even talk about new features, or if you want completely new indicators, you have some ideas, let's talk about it. So I hope you enjoy the tools. Stay excellent, team. There you go. I think that was a good run. Explaining the indicators. I can turn that into a full, I can just clip that out of the recording that I'm always making and turn it into a full video. Sounded nice too. Yeah. See, the problem that I had when I was doing it before, part of it was I had the camera on too. So I was trying to look at the camera and I don't have like a teleprompter in front of the camera. And so like my delivery was just really terrible. There's some things about the sound that kind of bother me too. I sometimes wonder like, the sound could be better. Like maybe I'm a little bit too compressed and maybe I'm not quite loud enough, but need a new card. I was like right on the precipice of maybe getting one, and then, kind of like, oh, I don't have a day job anymore. We need to kind of slow down on some things to make sure that we that the stream can keep going on indefinitely, regardless of what happens. So. I need an indicator that will tell me when I'm in a trending day within the first half an hour after the open. Well, I mean, you can add a moving average to a chart, right? Moving average will probably tell you, or actually I would probably use CCI, and CCI can probably give you a good idea of whether we're trending or not within 30 minutes. But my experience has been that at 30 minutes is already too late. But let me tell you something, hit and miss. You can predict what type of day it's going to be very accurately, actually. Okay. There's a Federal Reserve meeting tomorrow. Yeah, nobody's going to trade. It's going to be a range-bound day. I can almost guarantee you it's going to be a range-bound day. And if it's not, and you're seeing unusual amounts of volume early on, then it's going to be a trend day. But like 90% of the time, that is going to be a range-bound day. And 90% of the time, when there's a trend day, like there's a very good reason for it. I think one of the things that will catch people is that there will be a trend day and they're like, what's going on? This is crazy. And yeah, there wasn't some like big news story, some breaking thing. There wasn't a Federal Reserve meeting that day or anything like that. So why did it trend? Well, some of the biggest trends are caused by things like index fund rebalancing and things like that. So if you're really, really following all of those different order flows in the market and following the flow analyst reports, very rare that you really get caught off guards from a big trend day. And when those happen, if you're watching the orders, if you're watching the DOM, you will notice it. So this is something that I struggled with so much in the beginning, was like, oh, like this seems to work most of the time, but then there'll be this freak trend day and it just completely fails every time. Or I had setups that like they work every time, but only when it is a trend day. But once I moved over to really, really focusing on what's actually going on in a market and not just looking at the technical data, I didn't have those problems anymore. Okay, where can one find an index fund rebalancing flow? Okay, so first of all, there is a lot of rebalancing on the last day of the month and especially the last day of the quarter. So that's one of the places that you're going to look for it. There's also a bit of that flow kind of in the middle of the month. Okay, but if you go to Zero Hedge and you have a Zero Hedge premium subscription, not like the $100 one, but just like the $20 a month one or whatever it is, there are a lot of articles that are behind the paywall that are basically like Goldman Sachs flow analyst report things. And they will go through and they will say, okay, here is our model of CTAs. And here is the amount of money that we expect to come into the market from CTAs if we get above this price level. So they're not only are they like trying to measure how big certain types of players in the market are, but like how much volume they will put into the market when they come, so that you can kind of quantify things. So the flow analysts, they have other like data. We can get data that's like signed. We can say whether it's a market buy or a market sell. Like that's really the biggest advantage that we have over the regular retail trader that just only has price, is that they can't sign the volume. Then on top of that, being able to see the market depth and how the market depth reacts to the orders is also really, really valuable. Okay. But if you're working for the institutions, you can also see who is buying and selling, and you can build some metrics off of that. And so they do that, and sometimes you can get access to that publicly. And they post reports like that like every other day on Zero Hedge too. So you gotta read those. Like my overall goal tends to be read every premium article. Every article that's behind a paywall, I try and read on Zero Hedge. Most of the other ones I don't. I'm not as likely to read these days because it's just so political and a lot of it really is nonsense. One of the things that's really, really been grating at me lately is that there's a lot of people on the conservative side that would really like to just completely get rid of the Federal Reserve and go back to like a gold standard. So for instance, I saw one thing that was like a tweet purporting to be from the new Treasury Secretary, but it wasn't. It was from a fake account, but he was like, I'm going to get rid of the we're going to move to a gold standard on all of that. I'm like, it's such nonsense. And there's so many articles from people kind of trying to push that political view on zero hedge, and it's nonsense from people that really don't understand what they're talking about. You have to have debt in an economy because the amount of things that we want to do is always more than the things that we have already done. That's why you need debt. So even in a system where you're backed by gold, for instance, there was still, we just print the money and it's supposed to be backed by gold, but it really isn't. Why create your indicators gross versus tick levels per rotation? I'm not sure I understand what you're asking. There are some people that they will do things like what we were talking about earlier, where instead of looking at every order and what the bid ask was at that time, doing the things like if it's up, then it was up volume and things like that, right? But it's not as accurate. You only do that because you don't have the level 2 data, right? Now, there's also this thing where it's like rotations. Maybe you're talking about that. Like, for instance, I have the range histogram. And what I'm just doing is I'm just saying, what is the size of the bar? And what you could do instead is there's this whole thing of like harmonic rotations. So you go in and you say, put a zigzag on the chart and tell me how many ticks each zig in the zigzag is, right? But when I did all of that stuff, what I found overall was doing it on harmonic rotations is a lot more complicated and a lot more difficult to do for really, really large data sets. And the statistics that I got out of it were really not very different. And overall, what I have found is that, the market is very, very statistically efficient. And so the only kind of statistical aberrations that you're really going to find in price itself are related to the volatility of the instrument itself. So you really want to get all of your statistics and things like that. Look at it from a volatility perspective. So think of it like we have this is 0. So you can't have negative volatility in this situation. I guess we could say this is net change, right? Maybe a little bit larger. Okay. And here's 0. And we're going to get some sort of distribution that looks like this, right? With really, really long tails. Percent change of a bar. So now that you can see the distribution and you start thinking of your trading as manipulating this distribution, a bunch of things start to make sense. For instance, if you come in and you have a set target, you are basically cutting off this whole tail. I really don't see how you become profitable with cutting off that tail, to be honest with you, because this tail is so long that it is worth more than everything else over here combined. Okay. You want that far right tail. You don't necessarily want this far left tail. But this is percent change. If I just change it to amount of volatility, once I put a line here and I say, here's my stop, then there's a certain percentage of these other ones that come off, right? So now we have a different distribution, which is just the volatility of it, right? So we're going to have something like this, right? If I set a stop, I'm going like this. And I'm saying, now I can't, on all of these, these are 100% of these are losses because it hit my stop. Or maybe we could say 50% of the time you're winning. So maybe 50% of these are losses, right? Versus maybe 50% of these you're winning. You can go and you can start doing the math on that sort of stuff if you really have specifics and sort out, you know, is this really going to help? But once you start looking at it from a statistical perspective, and so you want to do it that way because then you can go and, you know, like go into R and make these distributions and look at them and make determinations about things. Okay, now D says he sent me a picture. Well, that I don't know what you're meaning to show from that. Is that just the market depth, right? That's probably just the market depth. So I think the thing is that I want to know how the liquidity is reacting to what's happening, right? Like the absolute amount that's on there most of the time doesn't matter. What matters is that we just ticked up and it only took 398 contracts to do it when there was 3,000 offered there just before. And once you start doing these aggregations over a time period, you lose that because it's a piece of information that's it's an instantaneous piece of information. It is the level 2 changed from 3,000 down to 398, and then we ticked up on only 398. So really what you're doing is, so if we were going to do this computationally, what we would really want to do is filter all of the changes. So I'm only recording a piece of data when the level 2 has changed yay much, and then put that into an LLM or something like that, right? But what you're going to do with the chart is you're aggregating based on time instead of filtering. You see? Why do you feel the gross calculation for that 5-minute rotation is more important than the per tick level? Okay, so you're asking, why do I care that the cumulative delta moved up versus at this particular price it was 500 versus 100? That's what you're asking. Yeah. Because the statistic that we have is if you pick a random order and you say, what sign is that order? Is it a buy or a sell? And then you come back an hour later and you pick another random order. There's a 0.05% chance that it will be the same type. So if it's a buy, there's a 0.05% chance that an hour later it will be a buy. That's just from picking a random order. So there is a strong autocorrelation in the sign of orders, which means that you're going to see an imbalance between buys and sells that is persistent over time. So you might not see that imbalance at that one individual price, but you will see, so you can get all these candles. Let's see if we can maybe do this kind of analysis here. Let me pull up a chart here. So if I open up ZB, and then I do their footprints on 30-minute interval. Okay. So now I'm also going to add into the indicators cumulative delta and footprint chart sets. Okay. So, what do we got here? Well, we can see in cumulative delta that cumulative delta is coming down. They were selling the 30-year. They were. That's why I picked that one, because I know that there's been more sell in the 30. It kind of looks like we're maybe steepening a little bit, but I don't know. It's not super clear. Okay. Now I'm coming and I'm looking at these footprint charts. Can I tell from the footprint chart that that's what's happening? Well, so it does highlight imbalances between them. So I can see that overall there is more, how do I forget how I change this. Is it Control Shift Alt? Oh, come on, there's a way to like go up and down. There we go. I just needed to move the mouse a little bit more. Right? So I can see that there's more gold prices highlighted on the sell side. Okay. But what makes you think that an imbalance at that one particular price is really going to tell you something about the larger market, right? I'm looking for something that's persistent, that I should be able to see through that entire 1 hour period. And in cumulative delta, I can see that. You don't really see it in the footprint chart. I really feel like that the footprint chart is interesting to people because there's so many numbers showing up everywhere. Your brain just goes crazy trying to find patterns and things with it. But like, can you actually show me a pattern on that really truly predicts something that's going to happen? I've never seen that kind of empirical data. On your top left chart, the white indicator is giving you a gross of that candle. That candle may say 3 to 5 ticks in CN, which would not tell us exactly where within that candle the issue was. Okay, so on this one, you're talking about this right here. Let me clear this out so you can see. No. Well, is that one a particular instance of what you're talking about? I mean, this top one, all this is how much overall level 2 activity is there. You can sometimes have instances where there's an uptick in level 2 activity, but like not an uptick in volatility and changes over here. And so it's kind of like people are putting limit orders in and are getting excited about something, but it's, you know, the rest of the market hasn't caught on yet. That will kind of happen, right? Most of these are kind of more like in, you know, changes at the end of the period because we have to quantize it in some way, right? This one is just, the bottom one is just, this is the largest thing that happened during that time. But again, another way of looking at this can be this. I don't really think that the price matters. Like, I don't think that it happened at this price versus this price matters. The only thing that matters is, in terms of prices, if there was a liquidity hole at a specific price, then they tend to come back to that liquidity hole. That's it. And I'm just going to see that on the DOM, and you can see that it doesn't go anywhere. Then you get into all the issues about like volume profile that that the way that people misinterpret the volume profiles. But another issue is that if I was going to, like these metrics, if I was going to keep these kinds of metrics for an individual price level, then you would have to have like 64 different data series. You're taking something that's one series right now and turning it into 64. It's kind of funny because it's like there's not enough data in price, right? So adding it's necessary. This is kind of one of these bigger issues. So oh man, and Nassim Taleb talks about this a lot, and it's something that I don't ever hear other people talk about because I don't think that they completely understand what he's saying. But price alone is not very effective at making predictions. So I need to come in and I need to add data series, right? Well, the problem with that is that the markets are fat-tailed. So the amount of fat-tailedness that you get rises exponentially with the number of data series that you have. So when you are coming in and you're building a model, the less features, you want your model to use the minimum number of features possible. Because the more features that you add, the more likely it is for it to run into one of these issues with the fat-tailedness not really coming out in your end results, essentially. So you need more than one, and that's kind of the issue, is like you need more data to possibly be able to predict the markets, but the more data that you add, the more issues you run into with being fooled by randomness, essentially. This is the conundrum that we have to sort out. Human brain, pretty good at sorting that conundrum out. Doing it statistically and with programming, I'm sure that there are ways that they deal with that, but I don't know what they are. Horizontal, but you are, because the way that you're talking about making it vertical is through price. No, I mean, so like when you say horizontal versus vertical, you're saying like, here, we have something like this, right? So it's telling me data, it's telling me statistics about this bit of data, sorting it by price rather than by time, right? So normally the dependent variable right here, x to y, right? We have a function. Let's do it like in maybe okay. Normally you have f of x equals y, right? So x is the independent variable, y is the dependent variable, x is typically time, and y is price. But we can flip it on its side and we can say the f of y equals v. So the price is the independent variable, and the dependent variable is the amount of volume that traded at that price, right? And so you would say, when you structure the market in this manner, are there statistical abnormalities that come out? There's one. The volume tends to follow a Gaussian distribution. And why does it tend to follow a Gaussian distribution? Because of the square root law. kind of starts to get, because you're stressing the liquidity providers out, they stop providing liquidity in this location, which makes it difficult for them to get away from there. And so it pins volatility to that one area for that time period. And that's why you get these volume profile distributions. And I've never found or been shown any other kind of statistical aberration when aggregating data in that way. The abnormalities that most is the Gaussian distribution. Yeah. A Gaussian distribution is basically like this. It basically means it's random. It's random with the center around a certain spot. Right? So if the market was truly random, then you wouldn't get Gaussian distributions. You wouldn't get this like this. It would look like this with just volume having traded like all over the place at everywhere. But it tends to cluster all in one spot. Why is that? The square root law. Just really quick checking on a couple of things here in the Discord. Oh, did we end the playlist? It looks like we did. Initial jobless claims tumble back near multi-decade lows. I really think that the market could be getting really big false, what would we call them? False flags? I don't know. By the employment data. Initial jobless claims tumble near multi-decade lows. So what's happening is companies are not laying people off, but they're not hiring people either. They're not growing. I really think that what's going to happen is you've got a group of people that are out of work. That group of people are out of work for too long. It will start to have an impact on spending, because if companies are not growing, people are not making more money, and some people are making less. Like this group of people that are, like unemployed 6 months or longer is doubled, right? You lose that spending. Eventually, it does kind of pull you down into a recession. And what will happen is, if you're looking at like jobless claims, you're not going to see it. It's like jobless claims are going to be really, really, really low. And then all of a sudden, 1 month, they just skyrocket. That's what will happen. If this very concerning low hire rate is actually a sign of larger weakness in the labor market. Why is it such a stretch to assume that if enough traders are using the same indicator volume profile for 200 moving average, for example, that they can be useful to design a strategy around? So it's really kind of an issue of like consistency, right? So like if I know at this moment that price action is really, really popular, and there's a bunch of people that are going to interpret something that just happened as a price action signal, or something that's about to happen as a price action signal, I can get in and buy it before them and ride the wave of all of them getting in, and then I can get out, right? And every time that I do that, I'm going to make money. But the issue is that every time that I do that, the people that try that, they're maybe losing money, or I'm just getting bigger and bigger and too big to the point where like I'm bigger than them, right? So the issue is not that you can't find an edge in a particular situation based around that. It's that over time, trading that edge and sizing up on that edge will remove it. So you really can't have something that is quote unquote popular and lasts. It will work for a certain amount of time and then it will go down. This is one of the reasons why I always say like this exercise, it's not just like an ego thing. I think everybody thinks that it's an ego thing. It's one of the most useful exercises you can possibly do in trading is, can you prove using a single 1 minute time price series some sort of long-term edge that holds over a 5-year time period? Because what you're going to see happen is, you know, part of this is to get people to realize that they've been duped. They talked to some guru on YouTube like myself that said, oh, I'm making tons of money. I don't say that, but there's a lot of people on YouTube that are like, oh, look at how much money I made this day, right? And they say, well, this guy is profitable, so they must know what they're talking about, right? But then, can they prove it empirically using a 1 minute time price series? No, they can't. They don't have that kind of data. Well, how long have they been trading for? Not 5 years. So immediately you should realize maybe I got my information from a bad source, right? But then you start bargaining with it. You start to say, well, I can do this. What about the turtle traders? The turtle traders, they were profitable, so that must mean that it does exist. Turtle traders weren't using 1 minute. They were using 1 day. So every kind of like a little bit of bargaining that you get in there kind of tells you something about the market that can help your trading. Okay, the turtle traders were profitable. Why doesn't that count? Because they were using daily bars, not 1 minute bars. Conclusion, maybe you shouldn't day trade. Maybe it's better to swing trade, right? Okay, I can tell you somebody that I know that makes money from trading. Nancy Pelosi, she makes money from trading. I think that she takes swing trades, but I bet you she could make money from day trading too. How does Nancy Pelosi make money? Well, she knows what's going to happen, right? Okay, so if you know what's going to happen, instead of using the technical indicators, that's maybe a way that you can do it. But you can't really backtest knowing what's going to happen, right? Is there any indicator such as a 200 moving average or VWAP, the institutional? Yes. Well, there are actually. So here are the price levels that I would pay attention to. Yeah, she literally has inside information. Okay. I'll make a list. Okay, VWAP. Or should they all be capitalized? VWAP. So there are algorithms that attempt to execute based on whether we're above or below the VWAP. But so this is one that is statistically interesting. that you will see like the market will kind of be in a different mode based on whether we're above or below the VWAP. I wouldn't say that there is like a
Block sell.
set entry conditions that you can get off of the VWAP or anything like that, but it still becomes interesting. Because what you basically, okay, so let me teach you about something else, okay? So like here you have the market, right? It's moving around. And there are like key levels, right? Now, this key level could be something like in the S&P 5,000, 6,000 right now, right? Really, really round number. There's a lot of research that suggests that there are round number biases. People have round number bias. We like there to be more zeros in it. And so they've done some research and they will find that there are more take profit and stop loss orders clustered around prices that end in zero. Okay, so if we are moving up here, generally speaking, there will be a lot of take profit orders on this side and a lot of stop loss orders on this side. Okay, so this does seem to me to be a potential. I haven't really seen super convincing empirical evidence of this, but I've seen people talk about it, and there are some studies about it. That there could be behavior around this. But the issue with this one is that the existence of that does not necessarily tell you whether they are going to bounce off of that resistance or make it through. Unfortunately, not with a risk adjusted, right? It's going to be, in the most cases, it's going to be like maybe 60% of the time it does move down, but you don't make as much as when you lose, when it goes through, right? Because it goes through, you're going to get slippage, right? Okay. So I'm just pointing out to you that an area of interest does not necessarily predict anything, okay? But there are some levels that people pay attention to that you kind of should look at as like, people might play games with these, okay? VWAP is 1. Okay. Previous. Oh, that's how the size has changed. Let me start over. VWAP is 1. Previous days highs and lows. Okay. Prior swings. So you will tend to see those like wherever, if you put a zigzag on your chart and where was the last time that it zigged, and then you go and you look at the DOM, you'll probably see more liquidity there for some reason. Okay. And then 50, 100, 200 day moving average, SMA. And then 50, 100, 200 day. Oh, we should put a D here. Day high / low. Okay. So these ones are interesting because of momentum traders. Okay. But just be careful because like the momentum traders are now like a known thing, and there's all sorts of stuff playing games with these guys. So you'll see a lot. Actually, let's come back because we were close to a moving average a little while ago, and I kind of lost track of it, forgot what we were doing with it. I think it was in the 10-year treasury, though. Wasn't it? Yeah. So over here, we came to the moving averages and ended up bouncing in that particular instance. But I think the one that I'm thinking about, it was October. Yeah, it was right here. So like here we came to the moving averages, and like what starts happening is you start seeing all these shenanigans. It starts going. Doesn't just go, oh, clean bounce. Like our inventory cost basis, you usually see clean bounces, right? Here's the spoos. Okay, we dropped. We're right there on the moving average. What happens is there's a lot of volatility around the moving average, right? So prices of interest, they definitely exist. And I think more broadly, like our inventory cost basis is an area of interest. That is a place that certain traders care about because that's where their average position came from. But the existence of a area of interest does not necessarily predictive, unfortunately. This has been my experience. Do you guys know how ECB percentage cut will affect U.S. Treasury notes? So, I haven't heard people talking about the ECB very much lately. Are they planning on cutting again? Oh, that's actually a really interesting thought, that the United States is holding off on interest rate cuts because we're unsure about how policy will be affected by Donald Trump being president now. But the ECB doesn't have that problem, and so they're going to cut rates. But the ECB does also have to consider what Donald Trump might do. So usually that's something priced into the markets, but like the game plan for it and everything is something that I usually don't have until like the day of. So come back on whenever the ECB meeting is, and then we'll talk about it. Well, by the way, should we come back to the cost basis indicator here? And you just circle the spots. No, you don't want to change the size of the thing. Gosh, it's not that. Okay, here was a big kind of push through it. And then you also get this and this. And you can see they just rotate between the two lines. John, CSF, I'm taking off. Thank you for joining. So, is there anything else going on? Well, I am seeing... So, in the S&P 500, so these lines are not quite as effective in the S&P 500. But we're getting a pretty big orange candle here, and it is crossing that cost basis line. So, some evidence that sellers are taking control of the market in the S&P 500 at the moment. But treasuries are also moving down. We're at the lows in the treasuries. So, and gold is just like taking off. Gold is just gangbusters and completely ignoring what the treasuries are doing. The dollar is, well, the dollar had a pretty big drop earlier. So I'm wondering if something's going on. Could that be signs that the market is all of a sudden concerned about inflation? I'm going to come to Twitter here real quick. Would you say a big institution algo is simultaneously buying and selling? Or are there algos that are just buying or just selling? It depends on the type of player, right? So, like that index fund, they're probably going to just just buy or just sell, at least on an individual instrument, right? Like part of what Aladdin does is Aladdin is able to look at all of the different instruments that they have and the risks and things that they know associated with each of those instruments and their contributions and distributions and everything in order to basically create like an optimal execution plan for them to make their moves and reduce their impact on the market. For instance, if there's two stocks and they kind of have like an anti-correlation with each other, then I can kind of trade this one and it will move that. And so then I can go and trade the other one because it will give me a better position in the other one. Things like that. Versus, you know, market makers. There's actually, I've read a bunch of studies that suggest that the HFTs are actually more market takers than they are market makers. That is mostly like 6 firms in most instruments that are providing the majority of the liquidity. And then everything else is just little guys that they know one spot where they can like market, buy into it, and take one tick. Let's see here. What's Nick Timmerow saying in the last 2 minutes? Donald Trump picked right up where he left off during his first term, badgering a favorite nemesis, the Federal Reserve, and its chair, Jay Powell, over its recent performance managing inflation and interest rates. But this sequel has a plot twist. In 2018, inflation was low and rate hikes were trying to preempt price pressures. Inflation isn't an imaginary foe today. While Trump's already jabbing at the Fed, he's notably not demanding cuts. Trump is savvy enough to know he just won an election because people don't like inflation, says Citi's chief economist Nathan Sheets. This isn't Powell's first rodeo, and he's using a playbook he honed well during Trump 1.0 to fortify the Fed's political freedom of movement. It's already anticipated by virtually everyone that Donald Trump cannot and will not stop talking about the Federal Reserve, but it doesn't necessarily carry much policy or informational content, said University UPenn's Peter Conti Brown. It's less than what he says about the Fed and more about what he does. I think Seth would be much more successful if he would niche himself as a treasury trader. Community is smaller, but there's no competition within influencers. Well, but I mean, I kind of think that that's what we already have. From my perspective, the trading order flow, trading treasuries with order flow, live streaming, and YouTube audience, I dominate that niche. When you go and you look at like how many people are searching for that on Google versus how many views I get a month, there's like really strong correlations there. So I already dominate that niche. So now it is, we need to expand the net, slowly get bigger. And that's kind of what we've been doing is I think that I've been able to expand this out into providing content that should be useful to all traders. But the issue is that stock traders are not really thinking about order flows. So something I would really like to do is to just start showing them order flow in individual stocks. And so that they can see that actually this is something that's really, really useful in stocks as well. And we should maybe learn about it. Have you traded? No, I did not. I suppose that I could have, but it wasn't really the very best action today, was it? The one trade that I think we could have made was that mean reversion trade on them coming back up. But overall, I just didn't really have anything. I think, though, to be honest with you, hit and miss lab, that maybe there was some trades in there. And me not taking trades had more to do with me being more concerned about other things right now. And I'm just, unfortunately, not in a very good place to be taking a ton of trades, unfortunately. In other words, there's a lot of information about the market that I'm missing. I don't have as much time to read everything as I would like and really focus on it. So, seems like if there was a trade to make, that the best play probably would have been a short like 30 minutes ago, but I didn't really see anything that would have told me that that's coming. It seems more broadly that something's happening today that I don't know what it is. ECB policymakers expect further interest rate cuts in March, 3 of them say. Policymakers expect broader, deeper debate about that, possibly implying an April pause, 3 of them say. So this is what you guys came in earlier and talked about. That was maybe something that I missed when it came out. Maybe that's why the treasuries came down. Okay, so what could be happening there, though? That doesn't really make sense, because if the ECB is cutting relative to the United States, that should reduce the demand for ECB bonds and increase the demand for US bonds, and that's not what we're seeing. And furthermore, this trend in gold has just been, I mean, good grief. Look at this thing. It's just crazy. Parabola. So remember, the square root law is like this. Okay, so when you get that thing, that's something else. But it does eventually get there. Usually these go, and then, right? When I first started trading, and I was like trading on a spreadsheet, swing trading on a spreadsheet, and basically what I would do is I would look at all the different commodities and I would look for something like that and I'd go long. Because back then it was like the era of QE and the carry trade was like a huge thing. And so all you had to do was figure out which asset was going to be the one that they all piled into, and you could just make money day after day after day. And it was an easy trade. I don't know if you'll ever get something so easy like that, but it didn't last forever. It only lasted for a year or so. Why is copper? I'm not sure. Why is, well, I think that overall, most of the commodities seem to be going up at the moment because the dollar took a pretty big plunge around around 7 o'clock. But that was 2 hours ago. I don't know what, and that was after the, what was it? The jobless claims. So I'm just not. And I haven't heard anything on my news squawk, so I think I might have not had it on. I must have forgotten to turn it on. UPS shares crash most on record after Amazon news. Oh, what's this? The sell-off follows a dismal 2025 revenue forecast and news that the company plans to slash 50% of its shipping volume with Amazon by the second half of 2026. Okay. Gold hits a new record high as Goldman sees macro conditions still perfect post-Fed. Cool. Because I own silver. So. Is it safe to say it came down as less offside and less buyers? It could be that simple. As for the treasuries coming down, yeah, I mean, the change is about 20, 30K. So I think that actually qualifies as a strong candidate for a move triggered by news of some sort. But it's not a like, oh, the news comes out and everybody freaks out sort of a news. It's something kind of simmering under the surface that I'm... So probably when you get to the end of the day, the reporters that talk to the desks, they'll probably have a really good idea of why that happened. So I just read the zero hedge synopsis of the day and things like that. Barring any news drops, if an institution has an algo running in an asset that is only buying, what condition would it need to shut it off and turn on a selling algo? Well, okay, so if I'm buying something and then a piece of information comes out that completely cancels the trade out, then I might switch it around to a sell algo just to dump my position that I had just added. So that's part of the reason why you would want to use a block trading firm, is that, or more broadly, one of the things that will happen is a institution will put a position on and they will have somebody babysit it. Like, I talked to traders that basically their whole thing was, we're long Japanese yen and I have to watch it, you know, in case somebody else comes in and starts moving price and everything. I kind of have to keep it in line and make sure that they don't pull any shenanigans, sort of a thing. Did you find? No, I'm not sure what you're talking about. That Spotify podcast? Unless you're talking about Strong Source. Which I would highly recommend. But I haven't gone that far on it. I've watched like 2 episodes. Oh, so you're further along than me. My intention is to listen to all of them and then try and interview Martin. Because he actually knows what he's talking about when it comes to commodities. Yeah, great for it. Yeah, that's when I've been listening to it too, is in the car. Not that I drive very much anymore. Like, more broadly, he talks about these things where it's like, you know, you want to look at, here's how much what we think about the crop and all of these sorts of things, and trades based off of that. And I really want to know how he does that. Like, I want to see him pull out an Excel spreadsheet and walk through, okay, here's how we're going to determine what we think is going to happen in the cocoa market. Yada yada, right? Like, there's a process there that it seems like somebody should have written a book about, but they haven't. But maybe that's what's in Avo's book, which is episode 2. Ivo Sarjanovic. He has a book out. Let me show you the book. It is called Commodities as an Asset Class. And according to Martin, this is basically like literally the only book on this subject out there. It only has 7 stars. Okay, somebody is knocking on the door. I think I should get going, guys. I will see you tomorrow. Stay excellent.